Hi guys, this is Wave 618. It's the 4th of August 2018, just approaching 10 a.m. BST. Okay, so just going to do an update on Bitcoin this morning. So just pulled up the 4-hourly chart here. We're on the logarithmic scale, and yeah, first of all, what we're going to be discussing in this video is just really to further reiterate what happened since my last video. So if you did watch my last video, you'll know that I was calling, I was shorting at this level at around 8,500. I mentioned that it could at one point make another high to 8,700, and so my stop loss was above 8,700. However, I mentioned that this was the start of a long move down to what I'm forecasting as this Z wave here, which I said would reach a minimum target of 4,300. So just going to further explain that setup again in this video, and also I feel like we're very close to being able to tighten up the stop and adjust it from 8,700 to the actual high at around 8,500. So yeah, first things first, let me just explain my wave count. So this was our W, 3 waves down, then we had X, and then Y, second X, and now we're waiting for wave Z. So that's one way of looking at it. There is another way where all of this could have been a descending triangle, which could just be one big X wave. So this could be W, X is a descending triangle, and then Y is going to be our final leg. So that's another way of looking at it. And that's important for calculating where our final wave, this wave down, will go to. So we will touch on that also in this video. Well, yeah, first of all, let's just re-explain why this was the top. And so first of all, there's a very nice Fibonacci retracement of a 0.618 retracement of the previous high-low. So it hit that very nicely. And then if we go on the daily, we can see if we put our moving averages, this is the black line represents the 200-day moving average, and that was hit very nicely. It was tested here and it's been tested again now. And usually if a trend is going to hold, it's the 200-day moving average that really needs to hold. That's usually the last extreme for a trend to hold, and once that breaks, we have to get worried about a possible change in trend. But as long as that holds strong, then the trend is very much continuing, and that trend is, as we can see, to the downside because price is under the 200-day moving average. Now, so that's just using the moving averages to forecast this top also. So let's just take that off a moment. So the other thing I'm just going to bring up now is this pitchfork. So just on a logarithmic scale. So the pitchfork, so this is a shift pitchfork, and we drew this from the beginning. That's our first pivot here. The end of wave W was our second pivot, and then our first X was our third pivot. And you can see that price tested the midline very nicely, then hovered around this upper median line before breaking that, and then just like it did in 2014 on a shift pitchfork, it started to test this 1.75 median line. So if we just have a quick look at 2014, similar picture here. With our shift pitchfork. So what happened? The second X, when that was formed, it tested this 1.75, and then you can see what happens for this final leg. So price is really trading in this range between the upper median line, that's this line, and the upper warning line. So price was ranging between here before making a final test of the median line right at the end. So I'll be looking for a similar play during this move here. So I'll be looking for price to just a channel between this upper median line and the upper warning line, and then at the last moment there could be a major sell-off to test this median line. So that's what I'll be looking at. And now let's break this down further just on the shorter time frame. So let's zoom in on the 4 hourly. In fact, so this second X, I want to further explain this because it was quite a complex Elliott wave setup, and a lot of people have been asking me questions about how I labeled the waves, so I'm going to go into that again. So let's just tidy this up a little bit. Let's take off that pitchfork, and in fact we'll plot this pitchfork on, and I'll explain that pitchfork as well for you. So this pitchfork was really useful, but first of all I'm going to explain the Elliott wave counts. So this X wave, I see it having made a WXY. So W was this 3 legs up to this point, okay? And then X was more complex. So that was a expanded flat. So this was A, and then B was 3 legs up to here, and then the C was 5 waves down to here. So it looked like an impulse wave, which the C leg often does in a flat pattern. So that was our ABC. And then this was our Y wave. And the Y wave is made up of an ABC in itself. So this was A, and then this was quite a nice pattern here. It was actually an expanding triangle. So we had A, B is an expanding triangle, and then C was our final leg up. The expanding triangle, you don't see these that often, so that's why I just want to mention this in this video. It's good from a learning point of view. You can see that the waves are getting bigger each time, as opposed to in a contracting triangle where the waves get smaller each time. In this case, the triangle points the other direction. It's like that. We call this an expanding triangle because the waves are getting larger each time. So it formed an expanding triangle and made its final C leg up there. And just to further confirm that count, we can see it has a good Elliott wave relationship, because if we plot from the beginning here, our fib extension tool, W I mentioned came up to here, this level. So it didn't come up to the top here, it's an expanded flat. It came up to here, then made an A, B, C down. So if we extend from there, look at that, it hits the 2.618 perfectly. So wave Y is a 2.618 extension of wave W. Alright, so very nice Fibonacci relationship there. On top of that, if we just have another look at the fib relationship in this setup here, so this wave W, so it came to around this 1.382. That's where so that in itself looks like a bit of a ABC type setup, where C is a 1.382 extension of wave A. Okay, so the importance of plotting, knowing exactly where your waves end is very important, because it allows you to plot your pivots perfectly. So first pivot is obviously at the beginning, but a lot of people wondered why I plotted the second pivot here, and this is because it's the end of wave W here. And then our third pivot is at the end of this X wave. So once you've got your first 2 waves in, your W and your X, you can then plot a pitchfork. So yeah, this is an Andrews pitchfork, so original pitchfork. So slightly different to the shift, the tangent, the gradient of the pitchfork is a bit steeper, and you can see it worked really nicely, this pitchfork. So basically, when we got our third pivot here, and then from there, price broke right through our median line, and then all the way up to the upper median line, where it found a bit of resistance, but eventually broke through, and then found very nice resistance at the upper warning line. So it actually reached this upper warning line at the same point that it was getting very, very close, within touching distance to the 200-day moving average, there was a 0.618 retracement of the previous high low, that's sort of this high to that low. So there's a lot of confluence of indicators at that point, which meant that I could trade this with conviction, and that's why I put a short on at this position. Now, so those are all the arguments for why this was the high. Okay, so I think I've included everything there. Now, just to, I'm an objective analysis. Yeah, I don't mind if Bitcoin goes up or down, but people will be arguing that Bitcoin has to go up. I just can't see an Elliott wave count or any analysis that would support that at all. I can't see anything to suggest that the bearish trend has been overcome. As I say, that larger pitchfork that I plotted is far from broken out. And these pitchforks, moving averages, if you want to establish the strength of a trend, they're the best things to use. So I strongly urge that you make them part of your trading strategy. But yeah, people have called this a wave 1, 2, and that 3, and then this is 4, and then we're going to say a wave 5 higher. First of all, how is that wave 1? Some kind of diagonal pattern, perhaps. It's a little bit far-fetched, in my opinion. I can't make it out. But anyway, you're calling this wave 1, and then so presumably this is your wave 2. So why didn't we reach the 2.618? Yeah, so it doesn't add up to me. If this was a wave 3, why is it falling short of this 2.618? Does not make sense. And then apparently this is a wave 4. Well, if it is a wave 4, then it needs to do something quick, because we've had almost a that would be our, if it was an ABC down, so, or a WXY, so this would be our first wave, and our third wave is already a 1.382 extension of that. So if it goes beyond the 1.618, I think we can forget the wave 4. On top of that, wave 4, if it is a wave 4, how much has it retraced so far? It's retraced to the 50% point. So it's just a few Elliott wave bulls that are slowing the price down here. It's hit the 50%. And as soon as this line breaks, it's going to break heavy, because it's very unusual for a wave 4 to retrace more than 50%. It's not a wave 4, but there are some people trading it as if it's a wave 4, and that's what's slowing price from coming down further. On top of that, we're getting a head and shoulders pattern. So with this being a left shoulder, head, right shoulder, price is going to fall just as fast as it went up here. Price, if it breaks the downside, which I'm very sure it will do, it's going to come down very quickly before finding a bit of resistance at this point. At that point, surely the bulls would have given up, because wave 4, if this is so-called wave 4, would have overlapped with wave 1, which invalidates any Elliott wave count from that point of view. So just from a volume point of view, so you can see this massive gap in the volume here, and this is why price goes so fast during this period. It doesn't stop, it doesn't consolidate at this point. There's no support resistance between this level and this level. So once this breaks, it will confirm our head and shoulder pattern, left shoulder, head, right shoulder. Currently, this is the neckline. Once that neckline breaks, that's 7,300, or we could put it a little bit lower, around 7,230. Once that breaks, it's going to break down very steeply and come down to around this 6,700 level. Okay, big lack of volume here to demonstrate that, and then surely all the bullish sentiment will be lost. I'm sure the bulls are already starting to realize they've got it wrong at this point. However, any of them that still have some faith will have surely lost that faith at that point. Okay, so what else can we explain? Let's have a look. So I think I had another pitchfork that we could have looked at. Okay, so we've got this one as well. So whenever you've got your first two legs in any Elliott wave count, you can start to plot a pitchfork. So this is an Andrews pitchfork. We've got our first pivot at the top, second pivot here at the end of this wave, and then our wave 2 formed our third pivot. And you can see price is really nicely hitting the median line, and I expect this trend to continue down, down, down. So yeah, that's how I'm looking to trade this. But the main pitchfork to look at is, let's just zoom out now. The main pitchfork in terms of how to trade this move now is this one. So this is the pitchfork I am using to determine how to trade this. I mentioned price is going to range really between these levels here, occasionally touching the upper median line, may rarely touch this upper warning line again, but yeah, it's going to gradually come down following these lines. And where will it come down to? So I mentioned my minimum target of 4,300. So how did I get that? First of all, that was a 78.6 retracement. So let's just take off that logarithmic scale. So on the normal scale here, and so if we do a fib retracement, so move started there, finished here, came down to, so I believe it will come down to at least this 4,300 level. That's the 78.6 retracement. So that's a minimum target. Now you'll see whenever Bitcoin has made these large exponential moves up, it's always retraced to at least this 78.6 fib. So that's a bare minimum target. Okay, I do in fact think it could come down further, and I'll explain why. So if we just go on our 4-hourly chart again, so I did mention that it could be a WXYXZ. Alternatively, it could be a WXY, in which case I would draw trend lines like so. So bottom trend line and our top trend line like that. So again, that was another reason that we found resistance at this point. It had reached this downward sloping trend line, kind of went very slightly above it, but the line actually held very nicely. So that's another reason that price reversed at that level. But anyway, you can see here, it all looks very corrective. Each wave is really, there's no real impulse waves, and again there's falling volume which supports a triangular pattern also. So this is 3 waves up, 3 waves down, 3 waves up. This will be a more complex 3 waves down, and then yeah, it's 3 waves up. So it all looks very triangular to me. The only bit that ruins the triangle is the fact that this would be our A, B. So the B leg isn't quite touching this lower line. But in fact, within a pattern, a triangle pattern, only 4 of the waves need to actually touch the extremities of the pattern. So I still keep this triangle as being a valid pattern. And yeah, the reason that's significant, we can predict where price will go to based on this potential triangle. So what you will often see, there'll be a fib relationship between wave W and wave Y, and wave Y is going to start here because this is where the triangle finished at the end of wave E. So if we just do a fib extension, and I was suggesting the 0.382 was the one that's most likely to get hit, and the 0.382 comes to around this 3290 level, so we can put a little price tag there as a potential target. So that's if it is a triangle, we could look for a potential target around there. And another reason that level is quite significant is because if we just go on the daily, we can see at that level, or at the 3000 level, there is horizontal let's just put a horizontal line there. So we can see at this point, this line, this price level has acted as good resistance here, and then again a little bit of resistance, broke through but came down, acted as support. So it's a significant price level, this 3,000 level. This target is slightly above it, but what could happen is we may get a wick down and then a close around this 3,300 level. And you can see it's quite close to this median line when I plotted it here as well. And I mentioned that we're likely to, at the end of this final leg down, we're likely to test this median line again. So I hope that explains why I feel that was the top, why I feel like any bullish momentum is soon to end, and I believe it's going to end after this head and shoulders plays out. I expect price to trade in this trading range downwards before making a big move down and testing this median line, at least testing the 4,300, but could very well go to the 3,000 mark. So yeah, that's what I'm looking at. I hope that sums up everything to you. Hope it was clear. And yeah, once more, thank you very much for the support. Approaching 2,500 YouTube subscribers now, so yeah, it's a great number of you following me now, so really appreciate the support. Continue with that, and I'll continue making the videos. Alright, thanks guys for watching, take care.